I always tell people I think there's three huge problems in America. It's education, healthcare, and finance.
Hello, investors, and welcome back to Just Randy Stocks. That was a video clip of Chen, which is the founder and CEO of NerdWallet, or ticker symbol NRDS, which is going public this week on November 4th, and it's going to be between a price range of $17 and $19. We're going to go over NerdWallet's story. We're going to go over the valuation, whether or not this is a good buy. But before we do all of that, I want to make sure we listen to the second half of this video clip by Chen.
Within finance, one of the big problems is it's really hard for consumers to get transparency and just assurance around what they're doing because there's a lot of intermediaries between them and the products, brokers, agents, advisors, etc., who might be trying to steer them one way or another to earn a kickback, right? So the whole system is fraught with uncertainty. So we really try to be that trusted person that you can go to just find the best answer, find the best products.
So NerdWallet wants to be there for life decisions. Everything you have to go through as far as buying a home, getting life insurance, you name it, the verticals, we'll go through those in just a minute, but they want to be the most trusted partner out there in the fintech space. So how is the company building trust? The way they're doing this is they're making investments in their platform and they're making investments in their team. Their editorial team is about 100 plus people that are responsible for different areas of the financial network, and they specialize and day in, day out write the guidelines or rules. And then those go into coding to help machine learning and to nudge the consumer or small business, small, medium businesses to make financial decisions. So what's the story and background of the company? The quick version is Tim has a sister's asked a simple question. She plans on doing some traveling. Which credit card should I use? He goes to Google the answer, can't find a good answer, ends up coming up with a spreadsheet that's got pros and cons of these credit cards, posted online. It gets a lot of popularity. He decides he's got a business idea, but let's take a look at the timeline of the business. In 2009, NerdWallet was founded, so this is not a new company. It's been around for quite some time. In 2010, they introduced best credit cards as a consumer resource, so you could find out which credit card best suited your financial needs and lifestyle. In 2011, they reached over 100,000 monthly unique users, and in 2013, they reached over 1 million. In 2014, they doubled that to 2 million, and they started to increase the type of verticals that they were doing business, banking and investing verticals, and made over 1 million in revenue. In 2016, they extended even further to personal loans and mortgage, with 1 million in revenue. In 2017, they entered student loans and insurance verticals with 1 million in revenue. They also introduced their NerdWallet app, so that they've been working on their app since 2017. In 2018, they received the Consumer Excellence Award for their editorial coverage on personal finance issues, and people have really went to them for solutions. And in 2019, they were voted as the best places to work by Inc. magazine. And in 2020, the first international expansion, they did an acquisition that enabled their small and medium business to expand. And then 2021, they had some organic international expansion into Canada. So how does the company make money? The company generates substantially all of its revenue through fees paid by financial service partners in the form of either revenue per action, revenue per click, revenue per lead, or revenue per loan funded arrangement. So let's take a look at the results of operations and specifically revenue, and then I want to take a look at the net income loss. So 2019 to 2020, the year ending in December 31st, so this is a 1 year shot of their revenue for the entire year, 228.3 million in 2019. It did rise 7.5% in 2020 to 245.3 million. And you might say 7.5% isn't that great. So what happened and what is happening now in the 6 months ending June 30th of 2020 to 2021? We have 137.3 to 181.6, which does get me excited, and that represents a 32% growth. So what happened from 7.5% to 32%? And it's explained in here. Let's go over that. Credit card revenues decreased 30% for the year ending in December 31st 2020 compared to the same period in 2019, primarily due to lower approval rates in the market due to economic uncertainty resulting from the pandemic and tighter underwriting criteria. So the last thing I wanted to cover for the financials was the net loss, because they have typically been profitable historically, but you can see from the financial results here that they were taking on a net loss for their first time in the first half of 2021. So I'm reassured that this company has always been profitable. I see that this was a pandemic setback. I see those credit card revenue levels returning to pre-pandemic levels already, and the sales and marketing expenses were a little bit higher than traditional. I mean, they've had historically high sales and marketing expenses, but you expect when they go public, this is a very competitive space, they're going to need to spend some money in that area. Also, their acquisitions still had some cost associated to those. So here's the 9 months ending in September 30th, and you can see 2020, 2021, the dollar amount change, the percentage change, and there's 3 revenue verticals. There's going to be credit cards, loans, and other verticals, and other verticals refers to the new acquisitions. And here's your total revenue, and that's what you want to see. You want to see a nice revenue increase, and that's what it says here. 9 months ending in September 30th of 2021 compared to the 9 months ending of 2020. There were revenue increases across all verticals. So how many people are on the platform? How many monthly users do they have? That's another key metric that you're going to want to keep up with if you purchase this stock. MUUs are monthly unique users, and you can see from 2019 to 2020 it increased 3 million, and it's had a year-over-year 25% growth, but you can see it fluctuates from quarter to quarter, but year over year it's been continuously growing, and with their international expansion and acquisitions you can expect further growth. So what's the offering and valuation? And you can see here on page 7, I believe, yes, page 7 in the S1 filing, it's got the offering, and it's a total Class A common shares and Class B common stock to be outstanding after this offer is 64 million. Now there's some underwriters options which will actually increase this to about 65 million if these are executed. So just know that underwriters have the opportunity to buy this, further pushing up the initial public offering price when it launches to make this look successful. There's different strategies behind giving these additional shares, but that's a lot. It's a million additional shares in addition to the 65 million. Now this gives, according to Renaissance Capital, the IPO expert, personal finance platform NerdWallet sets terms for 131 million IPO launch. So this is going to be about an offering of 7.3 million shares, the price between $17 and $19, and a fully diluted market value of 1.3 billion. But the last thing I wanted to do is try and figure out where this price could go on IPO launch day for NerdWallet, and what I did was I went to FinViz to compare it to its competitors as far as outstanding shares, market cap, volume, and I see this being a high volume IPO release in the financial sector for credit card services. And you can see we got Visa, PayPal, SoFi, and Lending Club. And I think it falls somewhere in between SoFi and Lending Club, and potentially, with the 65 million shares and a 1.3 billion valuation at about $19 a share. I mean, this could easily double and be around a 5 billion market cap, 4 billion market cap like Lending Club. I think their financials are somewhat similar, and Lending Club right now sitting at $45 a share. So those are my thoughts. Let me know what your thoughts are in the comments below, and I'll see you in the next video.